Good afternoon, everybody. It is Jeff Scott. It is about 2:30 on Sunday afternoon I guess today is April 12th, a couple days before taxes are due. And welcome to this week's edition of Top Down Review. I called it All Systems Go, as it certainly looks like, although no guarantee, that this market wants to continue going further to the upside. My contact information, hgsidoc@gmail.com. Start off with the usual disclaimers. This is for educational purposes only. Any recommendations are in the spirit of education, not investment advice. I'm a doctor, not a broker. I am truly independent. I have paid for all the tools I demonstrate. Nobody pays me to say good or bad things about them or anybody else. And my goal is just to show you how I use the tools to make money. And this has been a good market to make money in over the last couple of weeks. It's important to recognize that trading involves risk, and you alone are solely responsible for any investment decisions you make. As always, my whole philosophy is to teach you as I was taught to become your own guru. As Ian Woodward, a very brilliant man shown in the upper left-hand corner, has said to me multiple times, Jeffrey, I'm not the guru. I teach you to be your own guru. And if I could only be 10% as good as Ian has been in teaching people, then I feel like I've done some good. What I've learned starts with canceling. William O'Neill, elevated by Morales and Katcher, and then automated by Ian Woodward and Ron Brown using HGSI software. There's a philosophy of high growth stock investing, and then there's the HGSI tool, which are separate, although very dependent upon each other, although the software can be used for value investors, ETFs, etc. I've supplemented my learnings with things from Alexander Elder. Here he is with his partner, Kerry Lavorne. Some excellent books. The Trading for a Living book has just been updated. John Person, one of my mentors, who has done a great job of helping me more on short-term trading and swing trading. He's got great indicator sets and also looks at the market from a top-down perspective. Tom Dorsey, I'm not a point and figure guy, but what I am is a comparative relative strength. And what I learned from Tom in his book was that's kind of what his whole website and his whole philosophy is about as well. Van Tharp, position size and money management. If you're a volume price, a VPA or VSA person, Anna Cooling's book's about $5 on Amazon. And then if you're a member of the HGSI community, Ron has shared a plugin for Thinkorswim, so you can get basically the benefits of a $10,000 software program for a $5 book and a free link for a software tool. And here's my buddy and co-teacher, trainer, whatever we want to call it, George Lee. We'll be talking a little bit about our upcoming educational event as we go forward. I use a lot of different software. I need TradeStation, Thinkorswim, and Genesis. From the perspective of analysis, I use HGSI and EdgeRater. There's a number of different seasonality trading programs, and then a number of websites that I find helpful as well. The first thing I ask myself every week, every day, every time I'm looking at the market is, where are we on this cycle? And this cycle is what I call fractal. Others call fractal. I didn't make that word up. And it means that that cycle repeats itself at almost any time frame that I might look. And the purpose here is to remind you that stocks go up and they go down. When you're starting a bull run, you want to be overly long. When you are getting ready to roll over, you want to lighten up. And we'll talk more about that as we go today. And we've sort of taken just the top of this off and have been trading around this in a sort of a, you don't really have big sell-offs, but we've been in a trading range where we run up and we run back down, up and down, up and down. We'll show you that on the charts. And nothing says we're any different except we're probably on the upswing still and not yet the downswing. Based upon where I think I'm at, and I've covered this before, so you can always stop and look at them. There are different strategies that I'm going to put on, whether I'm very bullish, bearish, or neutral. And they're well defined here, and we'll talk about them as we go. And we build upon this with scans and trades at the live meeting. Now, I'll take full credit for this quote because I made it up today. And it's a judgment call to hold stocks over earnings dates. Frankly, sometimes I do, sometimes I don't. But then it's bad judgment to not know when your stock's earnings date is scheduled. So I always start in this part by pulling out from levittbrothers.com, which uses briefing.com as a source. There's many sources on the internet, mostly free, to get earnings dates, and there's also a free plug-in for TradeStation. I guess the important thing to see here is that Bank of the Ozarks, which is on my list of interesting stocks this weekend, reports Monday after the close. JP Morgan, J&J on Tuesday before it opens. Bank of America, Delta Airlines, PNC Bank, USB, all before the market on Wednesday. Netflix on Wednesday afternoon. We might look at potential seasonality on that trade, and so on and so forth. You need to know when your stocks present. Not only do you need to know when your stocks present their earnings, you probably need to know if your stock is not the leader in a sector or industry. If that leader presents good data, your stock goes up, and if they present bad data on earnings, your stock goes down. So you probably need to know when others in the sector are presenting as well. And I find it very useful when others present before my stock in a sector, even if I'm in the leader, to actually look at the notes from the call to get an understanding of what the core business is doing. I apologize for this in the upper part. I've got a glitch with my TradeStation today where it keeps looking for a file to download, so I'm ignoring that. You can ignore it too, I hope. Tonight's agenda, or today's agenda, as always, these introductory comments. Then we'll look at the market. We'll do my top-down analysis and then bottoms up, and we'll see how far we can get in about 60 to 70 minutes. Here's the official announcement. This meeting is a go. It is the George Lee and HGSI Doc Summer Summit, June 27th through 29th. It's at the Marriott Resort at Singer Island, a beautiful resort on a beautiful island right on the ocean. From June 27th to June 29th, who should attend? Traders wanting to become their own guru, users of the various software that I talk about who want to become better at using their software. You can never have used any of these software, although you probably have to have a trading platform. You'll find value in this meeting. Saturday, just a basic agenda. We'll look at HGSI tools and philosophy, trying to get those that are newbies to the point where they can get benefit from all the HGSI type discussion. George and I both have learned from a number of masters. We'll discuss that. We'll identify some of our favorite setups. And then one thing that's been requested in the survey is a little bit of options trading. I'm not a kind of guy that likes to do delta neutral strategies, but I do a number of directional trades, and I'll talk about that, as will George. On Sunday, using a term I learned from Alexander Elder, finding your A trade, I'm going to discuss what my perfect trade looks like. I will show you examples of it. I will show you how I do money management. George will show you how he scans the market for his perfect trades. And then either a guest speaker or myself will talk about some ways to do portfolio protection. On Monday, this was a big success when we did it in February. Both George and I will present what we look at in the pre-open. And then we'll have two screens up. George will have his computer projecting to one. I'll have mine to the second. And we'll talk about what we see happening at market open, identifying trades to take if they're there, but really giving you a feel of how we look at the market as it opens. And then I've asked George to discuss seasonality, how to use it to get an edge. And then we'll do at closing, even though the meeting is over at 5, at 4:15, I can do an end-of-day update from HGSI, at least pricing, and we'll walk through and identify what we think the market's going to do on Tuesday. Registration, I've tried to design this to be a fair price. There's cost involved, not only the hotel and all the meals, but George and getting him here, etc. So for the registration, you get breakfast for 3 days, lunch for 3 days, dinner Saturday and Sunday. So every meal is taken care of, including snacks. We will provide a screencast of all podium presentations, as well as an HD video of all presentations pending technology and speaker permissions. And we have a series of TOS indicators for the HGSI signals that we provide at no charge. The cost is $1,000 per person. That also includes internet access during the meeting. The hotel is discounted down to $199 per person for single occupancy on a nightly basis. They do have some 2-bedroom suites, which may or may not be a better price. Speakers will be myself, George Lee, Chris White from EdgeRater, and I've invited a couple of special guests. At this point, nobody is confirmed, so I'm not going to put their names. This is critical. No software ownership is necessary to attend, but you should have a basic stock and market knowledge, as well as a willingness to learn. My contact for more information, and I send you the links to sign up, is hgsidoc@gmail.com. Registration is confirmed when payment is received, and seats are limited. So I kid you not about the beauty of this resort. It is right on the intercoastal and the ocean, front yard and backyard. I can't tell which is which, just like my condo, which is a couple doors down. The beach is lovely. Give yourself a present and come early or stay late. On Tuesday, we always go out on an intercoastal cruise for those that are left over. It's in between Father's Day and 4th of July. And the prices are fair because of that. Consider bringing your spouse or significant other because they'll be very happy with you. All right, let's take a look at last week. So I'm going to start with my Excel spreadsheet. So the first thing I do is an HGSI. It's called a group performance analysis. And those that have been with me for a while know that I do a massive list every week of watch lists. And then what I do with those watch lists is I build various sub lists, and I'll just show you what I'm talking about by lots of watch lists. These are my watch lists. They come from Smart Groups and HGSI, which are pre-formatted scans. They come from Investors Business Daily. They come from MarketSmith. They come from my own brand of scanning within HGSI. And I have a number of TradeStation scans, and I have a number of Metastock scans. Now, some are bullish, some are bearish. And what I do is I take these stocks and I collapse them down into 2 lists. One list that includes all of those stocks, which this week was a big whopper of 1,464. And I do a number of automated scans of this in TradeStation on a daily basis, trying to look at my universe here. And then I create another list, which is the top 15 of all these. I add all the MarketSmith 250s, the IBD 50s, and a number of other scans. And I end up with a list called my Weekend Bulls, which this weekend was 640. And I look at every one of those to get a feel of what's going on in the market. Am I a little bit anal? You can make up your own mind, but it works for me. And it also hopefully makes me sound smarter when I do these presentations because I've had to spend my whole weekend getting ready for it. So first thing I want to do is look at last week. So on the right here, you could see the dollar was up 2.59 from Friday night to Friday night. The NASDAQ was up 1.6, was the leader. Interestingly, and I don't know why I lost some of my, must be because of the filter I had on, but the S&P 500 was up. Actually didn't make it to this one. It was up here, as you could see. Was up 1.03%. So the S&P was up. I've seen a little bit bigger numbers. It depends if you measure from Friday close to or from Thursday close, as the case may be, to Friday close of the following week, or was it Monday open to Friday close? Then we had the big sell-off on futures without the cash market being open the previous Friday. Regardless, it was a good week in the market. Now, it was a great week, frankly, for our types of stocks. You could see that very few groups were in the red on and many of these were bearish. The bearish divergences, PSAR closed with squeezed down. And what's interesting is some of these bottom fishing and pullback stocks underperformed. Now, what did perform? Well, if we look at the IBD 50, it was up 2.66%, double the stocks in the S&P. If I look at a couple of my TradeStation scans, this one sort of blows me away. Stocks that were a Bible gap up, and it must have been like the last the Thursday of the prior week's close, because remember Friday the market didn't open because of Good Friday. If you were a buyable gap up on the Thursday 8 days before the end of this week, you ended up being up this week 7.2%. Top fundamental stocks, whether it was a screen of the day or a scan in MarketSmith for top fundamentals, were up 4.5%. Volume continues to be a big driver, up 3.52%. Now, HGS 100, which is a much bigger list than the IBD 50, so it usually is closer to break even, was 2.22%. The GAF All-Stars 2.3, My Holdings 2.3, High Beta Stocks 2.3. So growth was en fuego, and growth outperformed, and hopefully you had a good week as well. No surprise, there are no fresh Hindenburgs. Last Hindenburg was March 16th, and therefore I'm not following that. Bucketology, and this is a little bit too big. Let me make this a little smaller. You could see that 63% of the stocks in the S&P 1500 were trading above the midline on their Bollinger Bands. That would be considered bullish, yet not a lot of extended. By extended, I expect to see a lot of stocks trading above the Bollinger Band or at the top of the Bollinger Band. So by this measure, we have room to go. When I look at the markets, I see that at least on the percent B, my trading signal for, say, an edge rater using the HGSI philosophy and the Woody indicator is over here, where we've gone from green to red to kind of choppy in here, but we're starting to go green on the percent B, so perhaps we are in a full-blown buy signal, as we'll see as this week goes on. Now I'm going to skip some of the specific scans I do and jump here to seasonality stocks. And what I wanted to show you, this is within Edge Rater. So let me just make a comment about seasonality. I'm not taking sides. There are a number of programs in the marketplace. There's some issues in the marketplace around a couple of programs that are out there. Edge Rater is not designed to be a full-fledged seasonality. I don't totally understand what goes in the other seasonality programs, except I know there's a number of algorithms that match up earnings dates and various other things and range trading, etc. What Edge Rater does for me, it takes a simple look and says, if I take the list of stocks in my universe and I ask, in this case, over the next month, what is the performance over the next month? What's the percent return over the next month? And the number of years up versus down. And I eliminated anything with more than 3 years down or less than 8 years up on this. And you could see there are a number of stocks as listed here and all over the place. We got some healthcare stocks, we got consumer staples, we got Sherwin-Williams, we got banks, we got trains, we got train manufacturers that all have seasonal strength at this time of year, including some utilities. If we look at a sort of the same data, but now I'm sorting on percent return, the big winners, Encore Capital Group, up 28%, 10 out of 12 years positive. Sunstone Hotel Investors, up 10 years in a row, average of 20%. Number of energy and number of REITs here of interest. You can get an idea of what might be moving. So there's a lot of stocks that have good numbers for this time of year. One that I've been looking at, I just saw here, BBG, 8 out of 10 years, averaging a 7% return. It's just a beaten up petroleum stock. Other thing I look at in Edge Rater is they have their own way of doing sector, industry group, market rotation. So this is only looking at the 10 sectors, so you're going to have the same 10 above and below. So let's just look at the upside ones. And what do we see? We see that top 10 based upon current performance, looking at rank changes and top rank acceleration, utilities at the top, consumer discretionary, technology, energy, healthcare, materials, industrials at the bottom. If you look at the biggest move to the upside over the last 21 days, energy has had a big move up and materials are starting to move. You can see the difference in rank. If we're looking at acceleration, materials, technology, and energy. So these might be where the leaders are going to come from. If we look at moves to the downside, finance and healthcare both moved to the downside over this period of time, and consumer staples, healthcare, and industries have the highest acceleration to the downside. The other thing you can look at with EdgeRater to get a sense of what's working is to look at the symbols for the same type of things. I probably got to put in better filters, but what I thought was interesting was gold's popping up all over the place. Biggest change to the upside, velocity. We got Nugget and we've got JNUG, well, at least GDJJ here and JNUG. So of the top 10 entities showing move to the upside, 3 of them are gold and a bunch of the others are energy. I think there's a story there about rotation, perhaps, of materials coming back into the market. I'll tell you that seasonality of silver is also very strong this time of year. All right, to save memory, I'm going to kill that spreadsheet. Such a big spreadsheet, it takes a few minutes. And what I'd like to do this time, I'm going to do a little differently. I'm going to go look at the stocks and HGSI first. Not the stocks, or the market. And then I'm going to pull my person indicators on the market and my elder indicators to see if I can confirm what my thoughts are about the market. So I start by going into my warehouse view, and hopefully it's going to fit the screen, or else I'll do my quick adjusting. All right. And then I want to go down to user groups, Woodward and Brown groups full, major markets plus, and I want to go into the top-down view. So again, for newbies, I'm looking at only price and volume, heavily influenced on Friday, some influence on the full week, and a teeny-weeny bit of influence from the last 3 weeks. And it's important to realize that everything here is technical in nature, and no fundamentals are being considered. So based upon that period of time, the Dow, big stocks leading, gold, NASDAQ up at the top, volatility, bonds, semis at the bottom. And small caps weakened a little bit this week from a comparative perspective. If I look at 5-day performance, oil, semis, NASDAQ 100, gas, NASDAQ, S&P 100, volatility, silver and gold near the bottom over 5 days, but on a 1-day, gasoline, oil, silver, gold, commodities. So if those are all up, one would expect on 1 day the dollar to be down. Actually, the dollar was not down. It was up a teeny bit. Interesting to see strength there while the dollar was holding its own. Very quickly, let's take a look at the S&P 500s. Now I'm going to start in my full webinar view, which has a lot of indicators on it, just to see if there's any recent kahunas or eurekas in Phoenix, which we do not see. So we're going to go into my simple view and let's see what we think. So first thing I want to point out is that, and I do this every week because I think it's important, is we are in the midst of a major bull run that started in March of 2009. We've had substantial pullbacks in the spring of 2010, the late summer and early fall of 2011, summer of 12, a small pullback, fall of 12, a small pullback. We never touched the 200-day moving average in 2013. We had a fairly substantial pullback in the fall of 2014, and we continue in a run. If you had bought TNA, a leveraged of small stocks, if you bought leveraged of big stocks, and you went to sleep for 3 years, you'd wake up a rich person. This has been a powerful bull. Where are we at today? So these are lines that I draw on a regular basis. So what I'd like to do is highlight a couple of them. So somewhere up here, this line will extend, and we have to look at trend line. This is at resistance, one way of looking at resistance, and this has been my support. And what I thought we would do is come back and bounce off of here, which we did. We had a false break, we came back down, tested support, and we've moved. We've had the 8 cross above the 17. The 17 is above the 200. I mean, the 50 is above the 200. The 17-day moving average came down and touched the 50 and turned up. This is what most of the indices look at. So as I look at this, and let's do some extension on some of my markers here, I would say that this continues to be support. So this is kind of where my downside support is. And somewhere up here, about 1220, give or take, is resistance. So the good news is we've got a little ways to go until we get to resistance. If we break through this resistance and then perhaps retest, then this line here, which is probably at 2150, 2160, might become a target. So I look at this. We had a big up week. We closed at the high of the day on Friday. We continue to have all these potential risks in the marketplace. Energy seeming to move back up will probably continue to lift stocks, and I can easily remain bullish as we are in the middle of this trading range. Although obviously I'll wait and see what the market does and not get married to any specific idea. If I look at the Dow Jones Industrials, the same basic pattern. We came back to support. Now we can look at a number of different ways. Perhaps we could say that we have a triangle here and we're heading up. We've got a little ways to go until we get to our resistance here. We also potentially have resistance at the top of this bar, which is somewhere over there. So we have room for the upside on the Dow, but I will pay attention to this trend line here as potential resistance, a breakout there, and that takes me up to the 18,300 range. If I look at the NASDAQ, I'll do the same thing. Here was my support. Here was some support based upon prior resistance becoming support going forward. And isn't it remarkable? We pulled right down to the confluence of this area and we bounced. If I look at this, where do I think I have my next resistance at? I got probably a couple areas. We're pretty close to that level there. You got to figure that at this point, if we can get above that, then we'll take out all-time highs. So we have a little ways to go on the NASDAQ, but we probably, after a few more days, will get into a place that we'll be looking for the market to potentially run into resistance, overhead supply, and potential difficulty. We look at the Russell 2000. Again, this was my prior resistance becoming support. We broke support here. We are now moving up nicely. And again, I would suspect that my resistance is somewhere up here. Now we are getting close. And I look at the Russell and I see that we had a kind of a doji-like spinning top occurring right under resistance. So we may be getting close. And you can see how the NASDAQ up here failed on multiple attempts to break out. So the Russell failed, is getting close to resistance. So the good news is all the markets are heading up. Resistance can't always be broken and markets can go higher, but we're getting closer and closer to an area where we probably ought to be cautious. Now, John Person and I have been talking about whether we're going to see a melt up, and I think there's very good chance of that, and that might be the last hurrah before this market rolls over. Now, if we look at some of the other important indicators, we might look at volatility, which is as low as it typically gets. Now, when volatility gets this low, it can really only go one direction. And the only direction it can go is up. And so I'll be looking for spikes up in volatility as perhaps an early sign that this market is at risk of topping, at least short term. And you can see this is exactly where the VIX has reversed in recent days. Let me add some stuff to this one. We're not just talking the last couple days. It goes back pretty far. Here was a lower base about a year ago. How about the dollar? As you know, because we've talked about, the dollar's been extremely strong. moved back up last week, and somewhat surprising that we're seeing so much strength in the market as the dollar had a great up week. We're starting to hear now more and more about stabilization in the EU, and perhaps that will temper some of the dollar enthusiasm. On the other hand, that dollar enthusiasm probably tempered some of the Fed interest in raising rates, with fear that a rising dollar would pressure U.S. earnings. A comment about earnings: there's a lot of expectations for earnings to be bad this quarter, especially in those entities that have exposure outside the U.S. because of that small dollar. And I think it'll be interesting to see if that's already priced into the market and if there's a surprise to the upside. Here is gold, and as I like to talk about gold, gold is weak because of the dollar. It's struggling to get above and stay above its 50-day moving average. It still has the 200 here as resistance. Why did the gold things drift up? Because it did have a big up day on Friday. It was up 1.1%, despite the fact that the dollar was strong. And if we look at silver, it looks basically the same. So without further ado, I would say that I am cautiously optimistic about the market, and but concerned that we're going to get up into resistance. I am extremely long right now, and I will probably have to evaluate that position as this week goes on. It's an option expiration week, and I got a number of options that I either have to exercise or let go away. This was a great week. I mean, no matter what, I can't not say that. I made a lot of money this week, and I hope you did as well. So I like to go into and look at my elder indicators and my person on the same chart. So I'm really looking here at a couple of different things. Let me get the NASDAQ up here. So we're paying specific attention to the daily chart here. And I'm looking, for the purposes of this education and this training, at just a couple of things. I'm looking at the color of the price bar. I know that a green price bar says it's okay, according to Elder, for me to go long or hold, but not to go short this instrument. A red price bar says it's okay to go short or hold, but I shouldn't be initiating new long positions. And a blue bar says there's no signal and I can do long, short, or hold. These little red dots at the top of the price bar represents a MACD and semi-automatic MACD histogram divergence, and it tells me that this rally would be tiring out. I can also see them in the setting of a bear market at the bottom of the price bars. And then you have this larger magenta circle or dot and this blue dot, and those are John Person's buy signals. So let's look at the NASDAQ. What do we see? We're in a buy signal green, green, and blue, so we can feel good to be long the NASDAQ. We're in a person buy signal. There's no obvious MACD divergence on the weekly or the daily. We are getting close to the upper envelope, but as we've seen in the past, prices have a tendency to just walk up along that upper envelope. Feel good about the NASDAQ. The Dow, green on a person buy, and we've worked off the MACD divergences. Feel good about the Dow. Russell futures, green, green, green. The good news is everything is green. We've got some MACD divergence concerns on the weekly, and you can see we've been in a buy signal from John Person's indicators for a little bit longer on the Russell. In his room, he was constantly calling out the strength of the Russell. Semiconductors, green on a person daily buy, and you can see the histogram we had some MACD divergences which have been worked off. S&P futures should not be open yet. Green on a buy signal, no divergences. NASDAQ 100, green, green, blue on a buy signal, no divergences. S&P cash market, so on and so forth, green, green, no divergences on a buy. S&P 100s, green on a buy, no divergences. And then the IWM Russell ETF Again, green MACD divergences on a buy signal. So using this stuff, it's pretty easy for me to feel pretty secure and comfortable with this market. One of the things that's been a little bit worrisome is that on the commitment of traders report, and I'm going to only highlight in a second on today, we've seen the people, we're yellow. We are the speculators that are small, the unreported guys. We are the ones that typically are wrong. The blue are the professional speculators, the hedge funds and the banks. And the commercials would be people that are hedging, usually their own positions. So we don't look at the red line, we look at the relationship of the yellow to the blue. If I go back to 2009 and the entire way down in the market, the professional speculators were extremely short while we were long. When the market bottomed, although they came in late, we went short and the professionals went long. If we look at where we're at today and where we've been, it's been kind of interesting how long, in fact, this is the longest in this recovery, the individual speculators like us have been, and recently the professional speculators went short. They look to be about stable. They're not very short. They're somewhat short. We've come down in our exuberance, and that's probably in the long run a bullish thing to see the non-professional speculators getting a little bit less exuberant about the market. Those person signals, by the way, that I showed you, I can monitor them real time on stocks. I can monitor them on indexes. And what I typically have is a number of watch lists. And I'm watching during the day for flashing in this column to come in, because this is often showing me when I've got something that's making a move. Well, the market's not trading this second, so I'm not surprised that we have nothing flashing there. And it's just looking for various tricks that can help me get into an investment early and looking for clear-cut signals. Here's a bullish signal that came in Celgene while in a downtrend. All right, enough of this. Let's go back into HGSI. So everything I have is consistent with being long in the market, and I am long. As I said, I'm probably a little bit too long. I don't want to hit that one. Oh, no. So let's now go back to HGSI. Let's open up the warehouse view. We are currently at 37 minutes. We're making pretty good time today, I think. And now I'm going to switch to my, well, you know what? Since we're making good time, I want to look at those spider sectors. Let's just take a look at I don't like what they're doing there. I thought I had one that was just the spiders of the market. Here it is. So let's just take a look. These are ranked by using that price and volume only as from top to bottom. So let's just take a view of these and give my comments on the various sectors. So let me, thanks to Robert Minkowski, I've got a new view I'm playing with, but let me shut that one down for right now. So just to reiterate what we've done in the past, the bongos are momentum indicators. The top one is long-term weekly. The second one down is daily. The middle is a accumulation distribution. The more green, the more accumulating. The deeper red, the more distributing. Yellow is neutral. Then I have my 13 and 2-day force. Then I have my high jump bar superimposed with red candle highs and green candle lows. Then I have my Bible gap ups, my squeezes, my MOBOs. Down here I have my pocket pivots as taught by Morales and Catcher. I have, below that, I have my on-balance volume with green candle lows, with Eureka's exuberance in the market pointing up and Phoenix's exuberance pointing down in red and brown. And then I have my kahunas. In my price window, I have a 8-day magenta exponential moving average, a green 17-day simple, a blue 50-day simple, and a red 200-day simple. These little dots are my Wilder's PSAR stop and reverse dots. I use it as one of my trading systems. So let's take a look. This is Spider, Industrial Spiders. It's been in a downtrend as signified by a weekly bongo that's green. I note my red. I note my force and my daily bongo have turned green. We're in a squeeze here. We had a PSAR reversal on Friday, and you've got to love this when it's come off the bottom and broke above the 50. And this looks like it wants to go higher, a pocket pivot in Kahuna. That says good things for the industrials. Energy, clearly in the penalty box, but bouncing off the walls and trying to head up. And I think we are making, at least from this point on, we made a series of higher lows, and we have a higher high. We'll see if this one can get up and make another higher high. Junk off the bottom, whatever it is, recovery of the sector, who knows? We're going to have resistance over here, but still looks like it's got some room to move up. Healthcare. Actually, for a spider, kind of getting tight up here. It's got to break above the PSAR. The weekly went red. Everything else is green. Up here, my momentum indicators, breaking above the 8 and the 17 day. 8 days should cross the 17 day on the next up day. Also looks bullish. If this was a stock, I guess it is a stock. Utilities, they've been in the penalty box, bouncing around the 200-day moving average. This might be a good time to start thinking about adding to utilities. They have dividend returns, and we are getting closer and closer to May. One thing to point out, two things about the sell in May and go away dictum. One, it doesn't always work. It hasn't worked the last couple of years. And two, it doesn't mean sell May 1st. But utilities might be a defensive way to play. Consumer discretionary at a new high. So it could see some resistance here, clearly in an uptrend. Consumer staples look just like consumer discretionary. You have a little bit ways to go until you get to your top area, but getting close to an all-time high. Technology sold off, but it's at a, if this was a stock, we'd be getting excited as it's about to break above the PSAR dot off the 50. Nice to see technology support. Here's an equal sector rating of the different sectors, and you can see certainly looks bullish. Materials below the 50, sort of in that land between the 50 and 200. Pattern is moving up off of a pullback. Higher lows, we'll see if we can get a higher high to take out this, but it's certainly weaker looking than some of the others. Finance, kind of going sideways with a squeeze, or about to enter a squeeze. All right, so I don't see any sector that looks bad, frankly. Second. Every once in a while, people ask me why I'm such a homer for HGSI. Well, you realize that, except when I was in TradeStation, everything I've done is within HGSI and EdgeRater. In EdgeRater, I use my HGSI user list, and I use the data in it. Next, I want to look at industry groups. So I'm going to pop down here. Whoops. And then you see we have 176, but I don't want to look at something that may have as much as 3 weeks of time in it. Let's look at a 2-day force. And we see that we're back up to 71 positive groups. That's a big number, again, reflecting some of the bullishness of the market. To the downside, we have 7: life insurance, base metals, investment managers, consumer electronics publishers, commercial residential building equipment and services, and lodging index. Okay, and if you look at them, all except for investment managers and life insurance, they actually were up over the last 5 days. So even the weak ones are relatively strong. If we broaden our window to a 5-day force to the downside, pick up a few more. Let's see, cement, mass merchants, healthcare supplies, home builders over a longer period of time have been weak, although again, over the 5-day change, only down 1.92. REITs had shown some weakness. If I look at the 5-day force up, it's not that one more. You can see we maintained 75, so there's strength in this market to the upside every way we look at it. So let's look at the 2-day force, the things that are moving now. And let's look at the top couple of groups. This is how I do my analysis. Biotech. Number one, so perhaps the seasonal weakness that we see in the IBB is up. Two of my holdings are the top two. So let's take a look at, here's Gilead. As I said, it's a current holding. This is a stock that I typically have put some hedges around. It's part of my stock, not portfolio protection strategies. What do I mean by that? Well, let me quickly see if I've turned off my personal information. Oh. All right, good. This is just a little account, so I'm not showing anything that's totally secret. Actually have started a managed account with John Person. More about that in the time to come. We put on one trade this week, which was Triple D. So let me go into my regular account. And I have a lot of positions. Some of these are long, some of these are short. So right now I own 5,000 shares of Gilead. I actually have a put that I put on that's lost some money at 102. But I sold a 90 put for May, and I sold a 110 call. So I'm making money on those two. Net, I'm out about $2,000 on my protection strategy, and I made $8,850 on the stock. Now I'm going to roll that 102 put, or since there's strength coming in, I'll probably close it. But what I typically do is I look at support and resistance. I figure that 102 is kind of going to be sort of my make or break on the stock. I looked at 90 as way out of the money, so anything I collect down here is just money in my pocket. And I looked at 110 up here as being probably out of the cards as well. So I sold premium at 110 and at 90, put that money in my pocket, and used it to buy a put at 102. I'm not playing those to make money. I'm playing the stock to make money. If the stock finishes between 102 and 110, then I'm going to be a happy camper. And if the stock goes above 110, I'll have to decide what to do with my 110 call that I sold. And if it drops between 102 and 90, I'm totally fine because I'm protected, and below 90, I've got a short put. So I've collared my gains here. I actually had sold my old position, then I went back in and put the puts and calls on it to protect it. But we'll see. My guess is it's going to move up. I love the story. I love the fundamentals. I love the earnings growth. I love the fact that they've cured hepatitis C. I love the fact they've made a difference in HIV. Unfortunately, I don't love their pricing, and neither does the market. So we'll see. My goal was to be neutral on my option positions and limit my downside risk to $102 on my stock position. And again, I funded it by selling a call out of the money and sold a put out of the money. So frankly, anywhere between 90 and 110, I make money. Now, if I remember correctly, there was another call in there, or another put that I'd sold and made money on in that trade. I'd have to go back and look at it. That's Gilead. Here is Celgene. Celgene has pulled back, looks like it wants to come back up. Not as happy looking. If I look at Gilead as a stock, we are clearly in a squeeze, sitting on top of the 200-day moving average. You see the 50, the 8, the 17, and the 200 all coming together, starting to go green over here. Great earnings per share coming in, really building up energy, ready to spring ahead, I hope, since I have that long position. Celgene, not quite as nice looking. Now, if I go out a little bit, let me kill that. If I go into a weekly picture on Celgene, you can see how a good performer it's been. It's certainly in a pullback here, a relatively shallow pullback. And I'm long here, and I have had a collar on it, which I took off on Friday down from 125 here, and I covered it because it looked to me like it was ready, it was done going down. So Celgene, we'll see if it comes back up. For a biotech stock that's mature, it has a great earnings per share growth rate and a PE that's priced, I think, appropriately. I think the stock goes back up and takes out all-time highs. Alexion Pharmaceuticals pull back to the 200-day moving average. Kind of reminds me a lot of Gilead breaking out above here. Mobile breakout and a pocket pivot. Good earnings per share growth, but not this coming quarter. Amgen, sideways. Looks like it might want to try and go higher. ISIS, pullback, trying to get above the 50. This is one of my favorite types of trade, although I'm not advocating it on this stock without earnings, of being right below that PSAR dot with some very sensible places to put stops if it breaks above there. So biotech, frankly, does it look great? Doesn't look great. This one looks pretty nice. It's moving up off the 50 and 17. Took out the PSAR on Friday. Everything is green. Doesn't make money. ALNY. Here's Regeneron. This has been a big kahuna. Pull back here. Wants to run again. What I see almost across the board probably reflects this. Here's the IBB, which is the sector. And you can see when Biogen IDEC got a positive data in Alzheimer's, it ran up, and I'll put that on in a second, and it took the whole IBB with it. The IBB sold right down to its 50-day moving average, which has been a great place to buy in these stocks. And if you look at all those stocks moving up over the last 5 days, this is as the IBB turned around. If you look at BIB, you'll see a similar pattern where a big up here, pull back down to 50, and setting up what looks like a very nice buying opportunity. All right, that's biotech. So not extended, a couple of interesting buys. Electrical Power Equipment Index, that's a weird one. Yeah, because of GE. GE spinning off its GE Capital, or parts of it. And you can see how much Wall Street loved it. It had 352 million shares traded on Friday. The average volume is 41 million, so you had 10 times the average volume move on Friday. And since force is volume times price change, when you have a 3% price change on that, 10% price change on $3 almost, and that kind of volume, you're going to come to the top on the force. That's an aberration. That's the only one above the index in the group. Specialty pharma. Look at a couple of these. Own several of these. Some of these have been great. Here is Acadia, ACAD. This is one that, like everything else, came back to the 50. I'm going to put this on my buy list. I don't like its earnings per share, but something's going on here, and so I want to add this to my existing list, which is gigantic this week. So much so that I have a filtered buy list of my favorite. Why do I like this? Two kahunas, a pocket pivot, broke above the 50, a PSA reversal, everything is green. This one definitely looks like it wants to go higher. Let's see what it looks like on a weekly. And you could see it's not really a cup and a handle, but kind of here, although this left side's kind of shallow. And the stock's had some pretty robust sell-offs. Earnings are not to May 5th. So this looks interesting, but it doesn't make money. Horizon is one that I've been preaching and owning for quite some time since it broke, squeezed here for 2 quarters, broke out in January, continues to run, kind of getting gappy up here and probably getting to a place that's going to need to pause to refresh. It's got great earnings per share growth, by far more than its peers. Trades at a multiple that's pretty high, but much less than its growth rate. Getting extended, which would be my only concern. Acorn, one of my holdings, lower left, upper right, got kind of loose in here, had some accounting issues that turned out to be non-issues. Couple of pocket pivots, everything's turning green. I think this one wants to go higher. Again, notice the earnings per share growth. Jazz Pharmaceuticals, this one is hard to own, only because this hard pullback is sort of once. This is going back a little bit over a year, twice, 3 times, 4 times, 5 times. How many times can your stomach deal with that pullback, yet it's out near all-time highs, and it's just been very loose here, with that 50 weekly moving average being a very compelling place to go long on this stock. I owned this in the past. I don't currently own it. I do own Valiant. Valiant is sort of a serial acquirer. Every time it acquires something, the stock price goes up. But what they've acquired themselves is earnings per share growth commensurate with the multiple. And this is one of my bigger holdings, not because of share volume, but just because I bought it in the 30s and it's $210 a share now. All right, back. Infrastructure software. This has been a big place, and this is a lot of the network protection software companies, and several of these are on my watch list or my portfolio. Here's my favorite chart right now within this group, and this is FireEye. You can see a pullback to the 50, breakout, pull back to the 50 again, and broke out. PSAR reversal, everything is green. Kahunas, pocket pivots, and a mobile breakout. I like this one a lot. I don't know what I think of it. This is FEYE. Also in this group, Symantec, kind of coming from far below, more sideways, less interested. Microsoft looks to me like a stock to short on rises into the 50. Certainly not anything that's very exciting. Same with Oracle, sideways. Let me see if there's anything else in this list. PANW has been a great stock. It's in a sideways squeeze now, going back about 3 weeks. Had a mobile breakout, everything's green, and a pocket pivot on Friday. Perhaps it's getting ready to go. It's an expensive stock that loses money. Rackspace, sort of a cloud play of storage. Looks like it wants to go off the 50. Had a kahuna pocket pivot. Everything's turning green. A mobile breakout, and took out its PSAR on Friday. It's always been an expensive stock, but the earnings growth is starting to catch up to its multiple. Proof point. PFPT, a beautiful lower left, upper right. Again, doesn't make money. Expensive in the same area as PANW, but looks like it wants to go higher. Cyber has been one that I played a few times, and in the similar pullback to the 50, got a little flag in here. Let's see if it wants to run again as well. I've liked this group for some time. I continue to like this group. Communications equipment, Apple, the big leader here, and I think it's worth looking at the Apple chart because you're sort of in a wedge here, and the watch sales apparently are doing well. I don't get it. I'm sure I'll end up having one at some point because, as my wife knows, I buy everything that Apple has, so I'll have to buy that too. My guess is it goes higher. It breaks out of this trading range, but I'm looking for signals. It did have a Mobona breakout from a squeeze on Wednesday, closed up on Thursday, I closed up a little bit on Friday. Pocket pivot at the end of the week as well, mostly green above, but certainly kind of coiling here at the apex of this triangle. I think it will declare itself one way or the other, and a lot may depend upon news that comes out. Anything else here that I want to look at? Yeah, probably not. Small dividend, 1.5%, although I guess in the land of no interest in your bank account, 1.5% dividend is not so bad. Integrated oils. So let's just quickly look at where the energy is. 6 is oils, 8 is exploration, 9 is renewable. Refiners were somewhere down here, I thought. Midstream oil and gas, they're a dividend play as much as anything else. And I thought the refiners were here. Here's refiners. So all the major energy plays have made it onto the winners list here. Let's look at integrated oils real quick. Petrobras is an interesting story. I've talked about it before. Huge debt concerns, some criminal concerns, and kickback concerns, but they sit on a huge supply And I almost wonder if we shouldn't be looking at, out of kind of curiosity, let's go to trade. So Petrobras trades at 775. Is it almost worth it to buy some $10 2017 January calls, somewhere about $1.50, and just forget about it? This is a stock that ultimately, price of oil goes up at some point. Ultimately, they get out of their problems at some point. They still are sitting on huge reserves. And so for, $1,500, you can sit on 1,000 shares and not worry about it till January 17th. Who knows? It's been a $20 stock and higher. Again, it's their reserves that I find to be fascinating. But they have a bunch of scandals going on. And again, I'm just going back in time. Now you're in a $40 stock range. This, back in 2011, was a $40 stock. Who knows? The government's involved in it. There's a lot of negative things I could tell you. But in the words of Dan Fitzpatrick, this looks like it's done going down. Exxon, these pay about 3%, certainly in a downtrend. There's been some discussion about potential acquisitions. There's another Petrobras, British Petroleum, another one potential for acquisition that's been talked about. Charts are mediocre at best. Here's a 5.8% dividend yield. Bunch of pocket pivots turning green, probably on thoughts of rising oil and some on being a takeover candidate. What might be more exciting on the energy front, we look at the E&Ps. And again, a lot of discussion in the marketplace about potential acquisitions on these as well. Anadarko Petroleum, small dividend. You're going to see a similar pattern of moving up off the bottom. Look at the pocket pivots and turning green. This is APC. Here's Apache APA. Same thing, pocket pivots, kahunas turning green off the bottom. Here's Marathon Oil, same pattern, everything green up here. You got pocket pivots, kahunas, OBV turned up. Do you think people are predicting oil will stop falling? Don't know anything about post-rock. Here's ConocoPhillips, same basic pattern. EOG Resources, we'll see if it can hold to break through that 200-day moving average. Occidental Petroleum, again, breaking above the 50, everything is green. Certainly the oil exploration patch, I hope you have a couple of positions in it, and I think you need to be in it. I'm not convinced we're done going down. I've got some Whiting Petroleum, hasn't done much move, it's lagging. It's only off the bottom. Have some Matador, which I'll probably get rid of because I bought near the bottom. On the weekly chart, there was just this beautiful formation at the bottom right here. A bingo, long-legged doji, and a big move up. So I got into this stock somewhere in the $18, $19 range. It's had a very nice run off the bottom. Like this one, I like this one's chart. I don't like its earnings. And Fang has been a big mover. It makes money. Also a potential takeout candidate. But something's going on in this group where all the stocks are starting to look pretty attractive. I'm going to stop there on the long. I'm going to go to generic pharma. This is another group that makes a lot of sense to me. A couple of different things here. And one of perhaps my favorite buy arguments for tomorrow. Not this one. Parago is a buyout candidate by Mylan. So this is in arbitrage story. Mylan's buying them, same looking chart the last couple of days. But let's go where I'm a little bit more interested. Drum roll, flashing lights, fireworks. Put this on your buy list. Activist has been one of the big winners of this bull market. From $96 April 2013 to $300 April 2015. Used to be called Watson Pharmaceuticals, and I've talked about it on every web session since 2011 as an attractive story. Why do you want to put this on your buy signal right now? It might not be done going down, but let's look at the daily chart. The 50-day moving average has been a good place to buy this stock going back forever, ever since the uptrend. And where are we sitting right now on this stock? We are sitting exactly on the 50-day moving average. We had a tail below it. Play it whatever way you're most comfortable. Ignore it, that's okay. Put a buy stop above that 8-day exponential moving average. Buy it if it takes out the 17. Buy it if it trades higher on Friday. Take your pick. This is on my watch list. It's a great company and a chance to get in on a pullback. You want to know what my A trade is? That's my A trade. Here was an A trade, breaking out above the 50 down here. And this is LCI. This is another one of my stocks, another generic play, breaking out to all-time highs on Friday. Everything is green except distribution, which is yellow. Great earnings per share growth, slowing down. This has been a leader. And also in this group, Impacts has shown up on my scans a few times. You can see why it's a little bit extended. I'd rather buy it off the 50-day moving average, which again is a great place to find stocks. Not going to spend much time on the short side today because of the strength in the market. But let's go on the theme of finding stocks at the 50-day moving average. I've set my view to rank stocks on balanced technical and fundamentals, requiring you to have a $2.5 and 150,000 share minimum. I'm going to go up to the smart groups where it's done for you, and let's look at a couple of my favorites. Let's look at, under me, pull back to the 50 with a kahuna. And let's see if we can't find a stock in the top 5 that might be one of my A trades. And the one that first one is Netflix. So why is Netflix making this chart? Because I'm looking for stocks that are in an uptrend long term. So this is kind of loose, to put it mildly. But boy, if you bought it around the January earnings, you know it's in an uptrend. So it's in a big uptrend. It's pulled back to the 50 weekly and the 50 daily moving average. This smart group requires in an uptrend, pull back to the 50, kahuna, pocket pivot, everything is green. That is very bullish looking. It looks like an opportune time to be thinking about Netflix. Now let me throw in the big letters here. But, B-U-T. Not so fast. What's going on here? We have earnings per share slowing down. And we have earnings due date April 15th. We're going to look at that as an earnings play in a few minutes. Build-A-Bear Workshop. Boring as hell. Going sideways. Stuffed animals. However, this also qualifies as my Delta. Get on a plane and let an autopilot your trade. Because here is a trade, and these are things that we'll learn at my upcoming summit, where I made money on these trades for a decade by setting them up before I got on my plane and go do my day job. And why? Because this is such a simple trade. Now, I'm not necessarily saying I take this one. It's kind of too flat for me. I've got strong group strength. I had a mobile breakout from a squeeze on Friday. I was distributing, but I'm less red than I was. My weekly bondo is red because I've been in a downtrend. And I had a kahuna. But I'm sitting right below that PSAR dot. So if I wanted to buy this stock, my lowest day in the last, on the swing, my low is 1896 on that day. My low here was 1898. So my stop, 1895. If I break below my low here, I don't need to be in this stock. So I would put, as I'm doing my analysis, I would say I don't think the stock is going to go below that. Oh my goodness. It's going to go below there. And if I go back to this date, I see that the PSAR dot is at 2091. So I'm going to make my trade at 2095. So I see a problem right now, and why I wouldn't take this trade, and I'll show you that in a second. But if I was very bullish about this, I could sit here and I could go, all right, I'm getting on a plane. I'm going to put my buy stop right above that dot, which I decided would be about $20.95 if I put it in the right place. Now I could get on a plane and know that if the market opened up, and as long as Build-A-Bear traded up and traded above that PSAR dot, which is a trading system for some, that I would trigger a buy order just above that dot. At the same time, I would put in a stop order down here. Now, the reason why I don't take this trade is that's about 10%. I might, though, consider the bottom of this bar to be my stop, which would be about 1995. And now I'm risking about 7%. I might consider that. I don't like the distance here to my stop. But what I do like is if the market collapses on Monday at the open, I'm never going to take out my PSAR dot. I'm never going to be filled. If the market gaps up on Monday and then it comes back to fill the gap, I'll get filled at that time. And if Build-A-Bear goes up, regardless of the market, I get filled. But what I don't have to worry about when I get on my plane is if the market tanks at the open, I'm probably not going to get filled and lose a lot of money because I got a stop in there as well. So I call that my get on a plane delta trade, and more about that at the upcoming meeting. Chipotle Mexican Grill. Ooh, this looks interesting too. Sideways. Let's look at this on a weekly. Wow. Weekly pulled to the 50 weekly moving average. Let's go back to the daily. Mostly red, been in a downtrend, starting to go green, had a mobile breakout and a Bible gap up on Friday. We're going to look at this thing as a seasonal trade as well, CMG. Why? Because earnings dates are 4/21. What's the next one? Casey General Stores. Uptrend, sideways, to the 50, turning green in a squeeze with pocket pivots and a kahuna. What's not to like? So what I did here is I set up a scan, which all of you have in here, which is designed to find stocks in an uptrend, pulling back to their 50, and having a kahuna. Every one of these stocks was a potential buy candidate. It's not always like this. Night Transportation, a little bit deeper down, so I'd probably skip that one, but it might not be bad. Uptrend, sideways, off the 50, mobile breakout from the squeeze, everything's green, pocket pivot, and a kahuna makes money. This is Ingersoll IR Industrials. We started off today showing that industrial stocks are becoming, look like they're moving up. Took out the PSAR dot on Friday. This one looks interesting as well. That it's my favorite list. So that's one of my favorite scans. Another one of my favorite scans here is my potential squeezing with a potential reversal to the upside on the PSAR. So this is going to find stocks in an uptrend, which are right below that red dot, looking for any move up, triggering that dot, and giving me a potential get on a plain buy. Abbott Labs, Activision Blizzard. That one's too low. This one. See if any of them are. As you can see, a lot of stocks in uptrends, in a squeeze, by definition, right below that PSAR dot, looking to find stocks, is that Build-A-Bear Workshop, that I might want to put on a trade and get on a plane. We'll talk about 3 companies here and then move on. Cardinal Health, McKesson, and ABC. Here's Cardinal Health. Here's McKesson. Here's ABC. Right now, Cardinal Health and ABC look the best. These are the toll booths on healthcare. I've said it before. Every time a drug, or in the case of Cardinal, medical supply, in the case of McKesson, healthcare IT, whenever a drug finds its way into a hospital or into a doctor's office or into a retail pharmacy, it probably got there via one of these 3 companies who's charging a 1% toll to do their job after cost. These companies are money machines, and Obamacare has made them very successful money machines by increasing throughput. Lastly, as I said, I like seasonality. I'm not going to get into the arguments about which one to use, especially since there's probably potential litigation going to happen in the marketplace, which I don't want to be part of, although I'm only a user. So I'm going to look at Seasonality Trader only because of current functioning equipment, software, and hopefully this will stay functioning. This is the one that I find is the most useful, although there's a web-based version of Magenta which continues to improve as they try and compete with this. So let's look at CMGI. CMG. So what do I see here? First thing I see is we're in a channel at the high end of the channel. I'd rather be buying at the low end of the channel and selling at the high end of the channel. We're going into a seasonal period of time where my cross is, where the market's up 7 out of 9 years, an average return of 7.5%. Not bad, especially on a $600 stock, but these are expensive options, and if I can get it to cycle down here before earnings, then I might be more interested. I think right now that's not setting up the way I want it to be. Netflix. And this is kind of interesting because its earnings trade starts March 30th. It doesn't look very good. So I look at this and I see, again, a stock in a downtrend in a seasonally weak period of time. I don't see an edge in buying Netflix. Now, it may go crazy with its earnings, for all I know. But why do I need to take something that isn't giving me an edge? If I look at 6 months, this is an edge. This is the January quarter where it has a huge move. So I might look at the calendar, and both the Web Magenta and Seasonality Trader have calendars. And I might look and see, are there any things that look good this coming week? And I'm going to set it for 10 years, 90% win-loss ratio, and it's got to move 10% for me to get excited. You know, I see a lot of red. So I want to correct something I said. I meant to say that it's a seasonally weak time for silver. Here's PAAS. This is Pan American Silver. Let's take the last couple of cycles. You can see how it's cycling in a channel, and we're getting into a period of time where 9 out of 10 years weakness from April 13th to May 22nd with an average loss of 13.3%. So silver right now may not be where we want to be. When we opened this up, I was looking at SSRI, and that's when I realized I said the wrong thing. And again, in a channel going up in a very seasonably weak time, 8 out of 10 times starting April 10th, with an average decrease of 13.8%. So we don't want to be in silver. Go back to the calendar. See, are there anything in the long side that's going to meet my... Let's take a look at Apple, and then I'm going to probably say goodbye. So here's the channel for Apple. So Apple's in a... Well, if I started here, probably in a sideways channel, maybe a little up, a little down. And it's about to go into a big fat green area here from April 20th to June 5th, 8 out of 10 years positive, up 13%. So what have I learned from this? I've learned, let me just go back to my charts, and then I'm going to say goodbye. Almost say goodbye. I got one more thing to tell you. Come on. I think I opened it twice, which you can't do. Charts. All right. So SSRI, I'm going to look for opportunities to short. I'd love to short it here at the 200-day. It's hard to short a $5 stock, but I don't expect this one to be bouncing this week. PAAS. Stock looks good here, to be honest. The Kahuna Mobile breakup from a squeeze probably would not touch it because of seasonality. SLV, the ETF, looks like it might be rolling over. Netflix, boy, I'd love to be buying this right now, but when I looked at the seasonality, I'm going to pass. So these bother me. I'm going to pass on the earnings trade of Netflix. CMG, boy, I love the chart. Seasonality is not bad. I've got a little bit of time before earnings. The trade kicks in April 28th. I'm going to leave CMG on my watch list and wait till I get closer to earnings. I want to look at it the end of this week. And I think that's about it. So what did we do today? What did we accomplish? Went over the market and showed, regardless of which tools I use, the market looks strong, with the caveat of concern that we're getting near the high end of the range, not yet. We identified some strong sectors and industries, including those infrastructure plays, biotechnology, several of the energy plays. We looked at some stocks. And then lastly, I want to show you the scanner, and then I'm going to say goodbye. Before I get there, I want to remind everybody, if you like this stuff, you know I do this for free. No one pays me a thing. And about the only thing I hope to get out of it is that people who appreciate what I do come to my live meetings, which, by the way, $1,000 doesn't, well, it covers my costs, but not much more than that, so I don't really do those to make money off you either. But I do appreciate that support, and as long as I have attendance at my meetings, I'll continue the live meetings, and I'll continue these. interest wanes, then I'll probably wane on the reviews as well. I never started doing weekly. I just got in the habit, and it's kind of just turning on the machine while I do my own review. But again, if you want to show your support, come to the meeting from June 27th to the 29th. And remember, we'll feed you, we'll water you, we'll give you things to take home for the deeply discounted price of $1,000, and then discounted hotel, $199 a night plus tax. And remember, if you actually like your significant other, they'll be on the beach, and they're going to really like you when you get done with your day's work. And the spouses and or a guest per person are invited to the dinners, which will be at the pool deck at my condo, which is down the street from the Marriott. So lastly, how do I put this all together? It's a question I often get, and how much can I do in a given night? Here's my secret weapon. Right here, Person's Weekly Top 1000. What I have done is I take all my scans, all my little user groups, and I combine them, and I got those, what did we see, 1,600 stocks, 1,400 stocks this week. Then I create a custom symbol list in TradeStation, and then I run my scans. And what I'm looking for are high close dojis, and let me see if any of them were ones that really got me excited today, because there were a couple that made it to my trading list. So high close dojis are from John Person. By themselves, they can be a buy-sell signal. High close dojis being the buy signal, low close dojis being a potential sell signal. And what I'm basically looking at, you can't see it well here. Let me go into an HGSI chart. Actually, let me just expand this. Is the stock was in a downtrend, and on Friday, at the end of the downtrend, it had a low close doji, it had a high close doji. Now, if within 2 days, and this is Burlington Stores, if within the next 2 bars, I take out the high of that doji day, that is a buy signal. So a doji occurring after a turn down in the market, and then within 2 bars, I take out the high of that doji, that is a buy trigger. You could see here, I had a doji, I took out the high of that doji, and a nice run up. So this is a potential buy signal, and went on my buy list. I also look at buy signal 1s and buy signal 2s. And these are signals that show a person buy signal occurring at buy signal 2 at monthly pivot support. So let's look at Swift Transportation. And what you could see is the stock is pulled back to monthly support, and I get a little blue dot. Now what I do is I take all the stocks that I want to look at. Here's Celgene. This is a buy signal unfiltered. And I created a screen here that has the stocks that these are my filtered buy list for this week. And I can look at them in TradeStation or HGSI, but I'm going to go through a couple of them for you and show you how I've merged the 2 worlds together. Here's Activist. Activist, as we know, is pulling back. I don't yet have a buy signal on it. You notice lower lows, but the person histogram is higher, so that's a reversal sign in my mind. Then I have my Jeffrey dots, which start, there's 7 of them in total. I think there's Bible gap up, then there's pocket pivot, then there is mobile breakouts, then there's squeeze, then there's PSAR, then there's red and green candle, red candle high, green candle low, and then there's forced kahunas. And I look for greens, showing the moving up, and reds and downtrends. And that's incorporating those HGSI special indicators. This here is on balance volume, and I'm looking for direction, I'm looking for trend line changes, and I'm looking for its relationship to its moving average. So here was activist, and with an HGSI, and I've got a different view in TradeStation where I include the moving averages, but because this monitor is tough. So this is one we talked about. I love it because it's there. Now, reality is it's going to sit in my screen. I'm going to wait and get a buy signal intraday before I jump on it. Acorn, we looked at it in HGSI. Here's a stock that had a weekly high close doji. Doji's in here, and it traded above the high of it, turning green down here. ABC, we just looked at in HGSI, one of my favorite stocks, and so on and so forth. Ozark is a bank that I like a lot, and this was a buy signal that came in from John here. This is a high close doji coming in here, another buy trigger. You can see my HGSI indicators are turning into fire for buy signals. OBV is going up, and I'm getting to a place where this looks interesting, except it's got earnings before the open, so I'm not going to touch it. Other stocks that I found interesting, so I can scan them, and then I could dump them back into HGSI. Let's go back into the charting window. Now let me go to my filtered buy watch, and very quickly, well, this is getting long. We're already at 90 minutes. It's time to shut up. So very quickly, here's Acadia. We saw this together. Pull back to the 50. Kahuna's pocket pivot turning green out of a squeeze. Here's Activist. Here's Acorn, biotech stock, pull back to the 50 and running. Great earnings. Here's AmerisourceBergen, lower left, upper right, and tight. Here's Apple, ready to break out of a squeeze. Avigo Technologies, a semiconductor stock, kind of starting to base out here. Not perfect on my momentum indicators, but on my watch list to see if it's getting ready to move. Here's one that Buffett invested in, which has caused a big bump up here. It's an IPO. Everything is green. Hard to say what to do with IPOs, but when I see Buffett getting interested, I find it an interesting story. Bank of the Ozarks, I mentioned before, earnings come out on Monday. Mobile breakout from a squeeze, breaking above the 50. Pocket pivots and Kahunas, everything is green. Like this picture a lot. Another one I like a lot, pulling back to the 50, Bank of the Internet, BOFI. Good earnings per share growth. Earnings are the 30th, be aware. Broadcom, technology stock, doesn't look that hot, except it's sitting right below the PSAR dot at the 50. Mobile breakout, some pocket pivots. It's got good earnings per share growth, much higher growth than its multiple. CDK Global, uptrend, sideways, 50, right below the PSAR dot, and a Kahuna meets both of those scans. This looks interesting for this week. CDK Global, like that one a lot, about 1 million shares a day. Celadon, there's several truckers made my list. This is one of them. Great earnings per share growth, teeny weeny dividend, pull back to the 50. Might look for some momentum to come in. Cerner, healthcare education, healthcare IT, lower left, upper right. Earnings per share growth seem to be picking up. Coming out of a mobile breakout from a squeeze. These are the stocks that made my filtered buy list. CMG, we already talked about it. One of the energy plays, oil, gas exploration. This is a refiner, rather, clean energy fuel, CLNE. No dividend. Looks like it's done going down, moving up. Had a Kahuna on Friday out of a mobile breakout and a squeeze. I like that one. Here's another trucker. Pull back to the 50. All I need here is a momentum. Give me a Kahuna, give me a pocket pivot, give me a mobile breakout, and I'll be in. Great earnings per share growth. Covenant Transportation, not yet. CVTI. Edwards Life Sciences, healthcare devices, lower left, upper right, pull back close to the 50. Looks like it wants to run again. Gain Capital, pull back to the 50, now running, mobile breakout from a squeeze. Everything is green. Did have a Kahuna. Look at the earnings per share growth. If it makes these numbers, the stock goes up. It trades at a multiple of 14. Not a lot of volume, 278,000 shares a day, pays a 2% dividend. Ingersoll Rand, IR, pull back to the 50 and breaking out. Like this one a lot. This one is ripe right now. Here's another one that's ripe right now. This is MTSI, uptrend, pull back to the 50. Looks like it wants to run. Great earnings per share growth. This is one of the stocks I liked for this week. QSII, another stock like Cerner in the healthcare technology. Earnings starting to come into the stock, pulling back here. I'd probably wait and give it some more room to get above the 50, but it did have a kahuna and a mobile breakout from the squeeze and looks like it's starting to move. It pays a great dividend, 4.4%. Rackspace we looked at earlier. Sierra Wireless, another technology stock, pulling back at the 50, multiple kahunas coming out of a squeeze. Everything is green. That looks interesting. Compelling earnings story as well. Super Microcomputer is one that I've made money on several times. I buy it on pullbacks. Its earnings have clearly turned around here, are heading back up. Earnings greater than the multiple. Looks like it's done going down. Swift Transportation is the third transportation, beaten down at the 200. For this rally to persist, it'd be nice to see transports to continue. Trains are not in fuego. Airlines can't decide if they're in or not. Maybe it's going to be truckers that lead. Great earnings per share growth coming in. They benefit from low fuel costs. Perhaps my favorite retailer, Tractor Supply, not cheap with a multiple of 32, but uptrend sideways at the 50, ready to break out if it takes out that PSAR dot. Kahunas, all the works, like Tractor Supply a lot. And that concludes my watch list. Again, if you like these programs that I do, if you want to show appreciation and give back, come to my meeting. That's why I do these. Look forward to seeing you. HGSIdoc@gmail.com for any questions, comments. Have a great week, and let's go make some money. Good night, everybody.